Hello, my people. It's my hope that you are well. Welcome back as we continue to discuss life insurance products. It's interesting that I'm already in episode 4, and unfortunately, I have not mentioned even a single type of life insurance product that you can consider. But the thing is that I didn't need to lay a good foundation before even start mentioning the options that exist that you might consider. That's why sina haraka, so tuongee vitu general kwanza, so that you'll not have so many questions in your mind by the time you start getting to discuss the actual products that you can consider. And as I began this series, I said that the penetration rate of insurance is very low, but unfortunately, there is a lot of negativity, especially when it comes to life insurance product, and many people end up saying that it is a scam. And there are some reasons definitely as to why people say that. I believe that is not just a mere thought. That is something that might have come from an experience, some past experience, and people end up saying that insurance is a scam. I think for me there are three things that will make you personally end up saying that life insurance is a scam. And top at the list, it is the breach of contract. And in this I mean your breach of contract, a breach of contract from your side, not from the side of the insurance company, but from the side of you, the individual who has purchased the insurance policy. And the most common breach of contract is that it is failure to pay premiums. You see, an insurance is an exchange business where I agree to give out premiums, and insurance will pay me back when something happens or when my policy attains the maturity age. So it's an exchange. I give out premiums, and the insurance company give me an assurance that I'll get my benefits once my policy clears, or whatever the contract says. But many at times we get that we get to some financial situations where we are no longer able to pay the premiums as dictated by the contract that we signed, as indicated by the policy document that we were given. And definitely, I think there is no option to, especially in the early stages, there is no option to such breach of contract, because what will happen is that your policy will definitely lapse if you don't get to pay premiums. So before acquiring an insurance policy, a life insurance policy, make sure you are aware of the premiums to pay and when to pay the premiums, and also the grace period provided by that particular policy or by that particular insurance company. By grace period, we mean that if I'm supposed to pay my premium on 20th, what is the allowance that I have been given, that if I'm not to pay on 20th, what is the latest date that I can pay my premiums, because every insurance policy should have a grace period. So get to understand these things and get to acquire a policy where at least you can be able to comfortably pay the premiums without much struggle, to avoid the scenarios of where you are not able to pay your premiums, and at least that might improve your view on the life insurance product. The other one is failure to understand the policy terms. You see, Kenyans, we like being Kenyans, and we don't concentrate on the minor details. So you'll just rely on the information that you are given by the insurance agent or whoever that told you about the insurance policy. So you'll just base your faith on that small information that you are provided. But every insurance policy must have a policy document that now explains everything in details. It is good that when it comes to insurance matters, even in other types of insurance, hata ya gari, don't overlook that policy document, because that is the Bible that hold the relationship between the company and yourself. So you need to understand what is in there. Get to understand the terms. Seek clarification where it is not clear. Know what is covered within your policy. Know what it is not covered within your policy. So, like, I can give an example of a policy statement that I saw, and there was a clause that many people might ask, what happens if you have an insurance policy, then you commit suicide? Will the insurance company pay your beneficiary if that was the agreement to pay upon your death? And you'll find interesting that that will be addressed in your policy document, but juu hukusoma hutaelewa. So for this one, it is said that if you commit suicide within the first 12 months after you acquire the policy, no benefits will be paid to your insurer, to your beneficiaries. So if you don't read that, and definitely the reason as to why that policy is there is to prevent people from taking insurance policies with the option of conning the insurance company. Because if I have a family and I'm planning to commit suicide next month, I can approach an insurance company and get to take a life insurance policy with a very high premium, let's say 10,000, and we agree that if I die, the insurance company will pay my beneficiaries millions of money. Then next time they may commit suicide, and of course the insurance company have to avoid such scenarios, and that's why such statement will be in your policy documents, to ensure that you don't try to con or benefit from the insurance company. So but kama hujasoma hiyo, then uchukue policy and you go committing suicide before 12 months after you acquire the policy, and your people expected to get a pay from the insurance company, then they are not paid. They will be champions of passing the message that life insurance policies are a scam, but you went against the policy. The other thing that might make you feel like life insurance policies are scams, it is when you don't get the right policy. Like the policy that you get does not fit your goals, does not fit your needs. You will find that many agents that sell insurance products, they are just out there to make commissions. So they'll sell you policies where they know that they will make the best out of it. Let's say an example. you have a kid who is joining, let's say, high school or university in 5 years time. So, and you ideally need a if you have to, if you have to have an insurance, okay, a financial investment where the goal is to assist you educate your kid, it means that that investment vehicle should have a maturity of 5 years, because your kid, your child will be joining school in 5 years. Then someone comes and sells you an education policy of 10 years or 15 years. The maturity of that policy will come way after your kid is done with school. Of course, you'll be frustrated, and you get to say that insurance policies are a scam. So ensure that you get a policy that aligns to your that aligns to your goals. So have a conversation before getting into it. Get to understand the policy, what is covered, what is not covered. And if you are okay with it, you can dive in. And if you are not okay, you can just chip out. Otherwise, I think the policies work when you abide to the rules in the policy document, and you get a product that is aligned with your goal. Till next time, keep learning.